So Donald Trump is back with a bigger mandate than he had the first time round. What does this mean for Americans and their taxes? Hi, I'm Alex. I'm a partner in the US-UK team here at Blick Rothenberg. I'm here with Jim to talk about the US election. So Jim, there's a new president. Republicans have control of the House and the Senate. What does that mean for taxes?
Well, helpfully here, Alex, we have a history that can inform us. 2017, we had the same scenario, a Republican trifecta, as you said, the President, Senate, House of Representatives, all Republican. So in 2017, same scenarios we're going to have in 2025. What does that mean for taxes? Concerned is too strong of a word, but think that with that setup, you can push anything through that you want. But as you know, if you don't have a supermajority, you have to go through the reconciliation process, as they did in 2017. What did they do in 2017? They passed a major bit of legislation called the Tax Corrections and Job Act, TCJA. And that's the thing that brought in a lot of big changes. For example, the almost $14 million state and gift exemption. So that exemption has got a lot of discussion recently because at the end of 2025, it sunsets along with most of the TCJA changes. Why do they sunset? In order to get things through budget reconciliation, you have to pay for yourself. You have to show that whatever changes you're making are going to be paid for by other revenue items. So they sunset things in order to make the forecasting work. End of 2025, that was going to happen. So what's the major change we expect in 2025? Is that they're going to extend that. Trump has said he's going to do that. He's got a lot of other things that he wants to do, but that's one thing that's going to do, and it's going to cost some money. So I think that's the big thing to look at.
So to extend those tax cuts will clearly cost more money. How are they going to balance the books? Most
of what Trump has put on the table are things that will cost and not that will save. So I'm not sure where he's going to come up with the difference. Another thing he's talked about is one of the things that paid for the changes in TCJA was SALT, state and local tax exemption, right? He capped that at $10,000. Now for our clients and listeners that have a property in the US, for example, real estate tax alone these days can be $25,000, $30,000, right? So that $10,000 makes a big limit even before you get to state income taxes in places like California and New York, which can run up to 15% altogether. So he capped that at $10,000. That paid for a lot of the other things. One of the things he's talked about is removing that cap again. So that's another item that's going to create more expense. At least that I could see, I've not seen a lot discussed about tax revenue raisers. And as a corporate guy, you'll appreciate he's talking about reducing the corporate income tax rate down to 15?
Anything up to 15, yeah. And I think with that, because he's got to go through budget reconciliation, he's got this wish list of things that he would presumably wants to get through.
Yeah.
And if TCJA is a priority, that's where he's going to push that through and try and get the books to balance. It does mean that if that's his priority, some of the other proposals he may have put out there may be further down his wish list, and he may need to concede on some of those more aggressive changes, such as a large corporate rate cut, given he's not going to raise the corporate tax to pay for anything else.
Yeah.
So actually, it may stay at 21. I think for a lot of Americans, a lot of the policies he has proposed are domestic focused.
Yeah.
And I think that is a positive if you are a US business, but also if you are looking to do business in the US, I think the real key is doing business in the US is clearly going to be favorable than trying to operate from outside, particularly with tariffs, as well as we know, just the difficulty anyway of the tax and administration system of expanding into the US with your business.
Yeah, so you and your colleague Michael will be very busy with people looking to invest in the US. That's going to be a major piece of work, I'd imagine. The other thing that got a lot of attention from those of us living overseas is Trump made a very focused media campaign saying to people right before the election, we're going to remove the taxation of Americans overseas. We're going to go to a resident basis rather than a citizenship basis of taxation. And the key phrase there was he was talking about double taxation. You'll no longer be subject to double taxation. And I think getting back to everything has to be paid for, this is such a niche area. It doesn't raise that much money to the government anyway, but it's such a niche area. I think it's going to be hard to push that through a reconciliation bill. So more likely they'll lean on saying, well, look, actually very few people are double taxed. We've got this very large exemption for earned income exclusion covers off the lower earners. And then we've got double tax credits for people like in the UK and high tax locations. So there's very little double tax that occurs. So I think they'll probably lean on that. So bad news, I think, you probably will need to keep filing in the future.
So Jim, with the election result, it does seem that there's probably not going to be as much change as maybe some feared, and it's very much a case of watch this space for now as to what they may be able to get through, middle of next year, let's say, with regards to any kind of budget reconciliation. And actually for many of our clients, it's the UK side that's probably proving a lot more interesting with the changes announced in the budget that they probably want to be focused on.
Yeah, I think it's fair to say there's more to sink your teeth into on the UK side at the moment.
So with a Trump presidency, it feels like he's got his priorities to extend TCJA, and there may not be too dramatic changes. But as you know, with Donald Trump, anything could happen.
Al, the next 4 years will be anything but boring.
We're second term for President Trump. Anything can happen, so it's important to be proactive with your tax advice and keep on top of any changes they make. If you want to discuss further, please contact the US-UK team at Blick Rothenberg.